Hey, what's going on YouTube? This is Tom here with another episode of Market Cap Investing, where we're showing the power of compounding growth with fractional share investing on Fidelity. Just taking a look at our portfolio real fast. Google, Microsoft, Axon, DraftKings still at the top, and Zillow, Grow, Beam, SAM, SunPower at the bottom. We're going to buy more SunPower today. I'm going to go ahead and do that now. I'm going to take you over to the Yahoo Finance and show you why we're buying more of it. SunPower is a solar. Involved in solar technologies, solar power, solar generation. It's part of the future of electric vehicles. There we did SunPower, $5 market share, and it executes really quickly. I'm sure it'll highlight on the screen here that we bought more. As soon as I highlight, yep, so there we go, SunPower. So let me take you over to the Yahoo Finance page. So Yahoo Finance, here we have it. This is a company that earnings are growing. Revenue's growing, earnings are growing, revenue's growing, and it's basically flat for a few years, but it's even with the flat, its earnings are growing, and it's went from over here on the left from losing money regularly to even with less revenue now making money, and quarterly obviously had a great Q1. I think that was COVID related, a poor Q2, and back to positive on the Q3. So this is one of these companies, smaller cap. Capitalization of this company. Let me jump to that and show you where to find it if you're ever on Yahoo Finance and wanting to know how big a company is. I would say used to be 1 billion, less than 1 billion. In the last year and a half or so, it's gotten quite a bit bigger just from share price run up. It's at 3.7 billion, but still, if you compare that to some of the bigger companies, NextEra Energy, other things like that, this company has a lot of room to grow before it is before it's at the same market cap as others. Let me show you here on the what is market cap. Just a reminder again, market cap is how much it costs to buy every share of the whole company. And we should have SunPower in here already, even at a higher share price. So this is even less now. It's 3.6 or 3.7 billion. But if you look at NextEra Energy, which I think is in here also as another example, 143 billion. So if this grows by 20 times, it'll be close to the size of NextEra Energy if I did the math right. Maybe it's even more than that. So again, not doing the math right, it's 50 times, almost 50 times that it gets to grow before it's that size. So our $5 would become $250 based on that growth just in that one-time investment. So that's how the compounding works. That's why we're looking at market cap, because we're looking at smaller companies or companies that have a lot of room to grow, like SoFi last week, SunPower recently, CRISPR recently. We like to buy companies that are smaller market cap, so when they grow up to be bigger companies, we already own them, and our share price goes up with it, and we get to make a lot of money. Quick review of where we're at. Week 44, almost $20 made on $200 invested, almost 10%. We're kind of circling in on the end of the year. It's going to be close to 10 to 12%, depending on whether we're up or down right there at the end of the year. And that's fully what I expect for the first year. And keep in mind that this is probably an average of only about $115 for the whole year if you think about the fact that we started with only $5 a year ago. So the actual return is much higher than that. Next year, we're going to blow this out of the water. And over the course of the next 3 or 4 years, you're going to see this return number, the percentage get really high, almost stupid high. But it's going to be, this is the whole demonstration, is the power of long-term compounding. Buy shares now, buy them while they're cheap. When they get higher, you'll end up with a lot of money made off of investments. So anyway, hope you like the video. Please share and subscribe and leave a comment. Have a great day.